Very warm good evening to all our participants of this very special VCM on input tax credit. Esteemed friends, we have here with us today our most honorable immediate past president Atul Kumarji Gupta, our honorable past chairman of the GST and Indirect Taxes Committee, Central Council member, and currently our mentor and guide and holding the position of Vice Chairman of the GST and Indirect Taxes Committee, Sushil Ji Goyal. Friends, this particular webcast was scheduled by 11 a.m. in the morning, but due to certain technical glitches that we had to face, we immediately had to shift it today to 3 p.m. We seek your deepest apology for those considerations which were not under our control. Nevertheless, as promised, once again, we have here with us Atul Kumarji Gupta as per public demand. Yes, it is true. Many of the members came back to us and said that we need to have his lecture one more time. And we requested him to do the same. And he very graciously obliged us this Sunday evening, 3 p.m. Sir, thank you very much. And sincere gratitude to you for once again handling the nebulous topic of input tax credit in the GST
Recording
scenario.
has started.
Friends, all of you would be aware that without input tax credit, GST is a misnomer. With input tax credit, GST is everything. To talk to us on the input tax credit, Atul Kumarji Gupta will make his detailed presentation. To introduce him to all of us and also to give a brief overview of the program, I invite CA Sushil Kumarji Goyal. Sir, welcome, sir, and over to you. Thank you.
Thank you, Chairman Rajendra Kumarji, Central Council member from Chennai, Honorable Past President ICAI or immediate Past President ICAI, C. Atul Gupta ji. It is my honor to introduce the today's faculty, C. Atul Gupta. C. Atul Gupta is a staunch leader, risen to the highest position of the accounting profession in the country. That is President of Institute of Chartered Accountant of India, second largest body in the year 2020-21. Before that, he served as a vice president to the ICAI in 1920. He served as a chairman to various committees of the ICAI, like Digital Accounting Assurance Board, Information Technology Committee, Board of Studies, Indirect Tax Committee, this GST and Indirect Tax Committee earlier known as Indirect Tax Committee only. Under his stewardship at Board of Studies, the new scheme of education and training of ICAI was launched in the year 2017 with the hands of our Honorable President. With deep interest in research, he is credited for the project of preparation of accrual-based financial statement of Indian Railway, that is third largest railway of the world, under the ambit of the account. He has been also chairman of ICAI Account Research Foundation and Extensible Business Reporting Language, that is XBRL, India. He also been director to the governing body of Indian Institute of Insolvency Profession Registered Valuer Organization. On international front, he is on the board of International Federation of Accountants, that is IFAC, XBRL International and South Asian Federation of Accountants, that is SAFA, and representing ICAI in International Integrated Reporting Council, that is IIRC. He earlier has been chairman of the Committee on Education, Training and CPD of SAFA. Being thoroughly conversant with the professional concern and demand of his time, C.A. Gupta has authored many relevant books and has published numerous articles in the leading newspaper, magazines, and professional newsletters, and delivered lectures more than 1,500. With these words, I am presenting before you our past president C. Atul Gupta ji, and topic everything he will going to speak about the topic, so I'm not going to touch upon the topic. As chairman has correctly said, input tax credit is the backbone of the entire GST system. Without input tax credit, there is no GST. So everything lies upon the input tax credit. Over to our faculty today's CA Atul Gupta.
Thank you, Sushil ji, for a very nice introduction. Though I believe that we are all brothers and sisters, we are like a professional, a family, and everybody is aware about all these things. But very nice of you. And the Honorable Chairman of GST and Indirect Taxes Committee, my elder brother CA Rajinder Kumar ji, ably supported by the Vice Chairman, again elder brother CA Sushil Goyal ji, and all the team of GST and Indirect Taxes Committee, and all the viewers. A very good evening to all of you. And at the outset, though the chairman has mentioned about the technical glitch in the morning, so it was the technical glitch on my part. Because of that, there was some challenges to join at 11 o'clock, and the program has to shift at 3 p.m. So my apology to each one of you because of that kind of inconvenience you must all have to handle. Now, friends, today the topic, as rightly given by the Honorable Chairman and the Vice Chairman, that is the input tax credit, which is rightly clarified, like rightly, I will say, pronounced by each one of them. That is the actually the soul or the backbone of the entire indirect taxes regime, specifically when we are talking about the GST. As you are aware that when we are saying the GST, it is the goods and services tax, which is commonly known as VAT, value added tax across the globe. And the value added tax means that you are the tax the government is looking from you is only on the value addition you have made. So one side you have a output liability, the another side you have a credit available, and the differential amount you have to pay as a value added tax to the government exchequer. Now, when you are claiming that credit, whether that credit is a legitimate credit or not, you are really eligible to claim the credit or not, what kind of a precautions, the ratio, the portion you will be eligible to claim, what kind of a records you have to maintain to claim that credit is something that each one of us has to discuss. And the more you will discuss, the more clarity will come. And that's why the committee, under the able leadership of Rajinder Kumar ji and Sushil ji, is working hard to bring out number of publications, number of programs, including the certificate program and other, the VCM like this, so that the members can understand the various nuances or the nitty-gritties of the GST and the specifically for the input tax credit. Now, my dear friends, as we discussed on the last occasion, and unfortunately at that point of time also, there were some technical glitches for few minutes and the program was held up because of the some technical some internet issue were there in the Ahmedabad, some cyclone issues were connected there too. So again, it was being planned that let us have a full 2 hours program on the input tax credit once again, so that we can discuss and deliberate on the various nitty-gritties and the aspect related to the input tax credit. So let me share you the presentation to take you on the today's discussion. Just a second, please. Take a minute. So I believe you are in a position to see the presentation, Sushil ji. Sushil ji, आपका mute है. आप are you able to see my presentation?
Not sir, not right now.
No.
Yes, आ गया sir.
Now I cannot see.
Yes, आ गया sir.
No, I am not. Now I am not able to see. Just a second. Now I believe that we are all able to see the presentation.
Yes sir.
Yeah. So, Sushilji and Honorable Chairman Sir, when we were discussing about the input tax credit, and we both of all of us has rightly explained that the GST, when we talk about the value added tax, it is the input tax credit which is the backbone of the entire system. Now, my dear friend, when we are discussing about the input tax credit, there are the various sections, the provisions under the central GST and the state GST vis-a-vis the IGST. The various provisions are there which are related to the input tax credit, and likewise there are the various rules are there. So I have prepared a tabular presentation that from section 16 to section 21 deals with the input tax credit, and likewise there are the around 10 rules are there which are dealing with the various provisions related to the input tax credit. So we have rule 36, 37, then we have a rule 38, 42, 43. Likewise, we have the rule 39, 41, 40, and 44, which are in relation to the input tax credit. So, my dear friend, we will be discussing all these rules and the relevant sections one by one, and see that we will be able to complete the presentation in the next around 1 hour and 40 minutes. So, there should be around 10 minutes time. सुशील जी म्यूट कर लीजिएगा प्लीज सुशील जी म्यूट कर दीजिएगा सुशील जी म्यूट कर लेंगे एक बार तो friends, I was mentioning you that we are going to discuss all these sections and the rules which are related to our input tax credit one by one. Now, my dear friend, let us start with the input tax credit, the detailed understanding of the input tax credit. And first of all, we are going to discuss about the eligibility to claim a credit. So, my dear friend, when we are discussing about the input tax credit, we will be discussing about the eligibility part. We will be discussing that even if you are eligible and you have claimed the credit, whether you will be able to retain that credit or not. So one is taking the credit, and the another is a retention of the credit. The third one, we will be discussing about the various definition of a taxable or exempted supply, because we have to understand that in case I am dealing in the taxable and the exempted supply, what will be the right ratio of claiming the credit. So the one is the definition part, the another will be the formula that which is given under the rule 42, that how to claim the credit. Then, my dear friend, in spite of that you are eligible to claim the credit, all the conditions are fulfilled. There are certain block credits are there, wherein the credit will not be available in spite of that you are eligible or not. And then finally, my dear friends, we will be discussing the certain specific case studies and the specific provisions under the section 18 and otherwise, which are related to the input tax credit for the unique situations. Now, my dear friend, let us start with the eligibility. And I just wish to clarify you that there are the 5 fundamental eligibility is there that every SSC has to follow to claim an credit. So it is irrespective of the nature of the SSC that the credit will be available by following 5 conditions. The first one, that for the first condition, as we discussing to be eligible to claim the credit, that whatever the expenses you are incurring on which the credit is available. So for example, I incurred an expense of rupees 1 lakh and paid the 18,000 rupees as GST. So, my dear friend, what the law is saying, the first eligibility, that this 1 lakh rupees which I incurred on an expense, that should be related to my business. That should be related to my business, or I should be using that expenses for my business only. Then only the credit will be available. So, what the law is saying, the goods or services whose credit is to be availed are used or intended to be used in the course or furtherance of business. Meaning thereby, that in case any expense is there which is not related to my business or which is not going to be used for my business, in that case the credit of the same will not be available. I have given you an example also. For example, a director is there, a company is there, and the director is taking the higher education loan for his son. Now there is a processing charges. Say for example, there is a loan of rupees 10 lakh and 1 lakh rupees is the processing charges. On that 1 lakh rupees, the processing charges, in spite of this fact that the company has paid a check for that particular processing charges, the company will not be entitled to claim the 18,000 rupees credit, which is so claimed by the bank on the processing charges. Now, my dear friend, there is a word called intended to be. So, this is very, very important, that we need to understand, because what is happening, that what is going to happen, that at times you may be doing certain research, or you are incurring some pre-incorporation expenses on ultimately the company which you are going to establish, or the business you are going to establish, is going to offer the supply which are subject to the GST. And whatever the pre-incorporation or the research part of the, or the pre-supply part, that whatever the expenses you are incurring and you are paying the GST, if the same is going to be used in that business, meaning thereby intended to be used in that business, in that case also the credit will be available. So it is very, very important to understand that the pre-incorporation expenses or the expenses incurred for the research or the other activity, development activities, will also be eligible to claim. Only point is that that should be in close connection, that should be in conjunction with the ultimate output liability which is subject to the GST. Now, my dear friend, after this first condition, that the expenses you are incurring should be intended to be used for the business, the second condition is that you should have a valid document available in your hand. So you should be possessing either a tax invoice or any other tax paying document. Now, when we are saying the tax invoice, so it's an invoice, but the tax paying documents are the 4 different type of documents are there which are classified as a tax paying document. One is a debit note. So say for example, a supplier is issuing rather than an invoice, issuing a debit note to you in relation to a credit note or something like that. In that case, that debit note will also make you eligible to claim the credit, or the vice versa. The second one, that apart from the invoice, is the invoice issued in case of a reverse charge. So you are aware, say for example, I am an advocate, I am raising the invoice to Sushilji, and the Sushilji has to pay the tax under the reverse charge mechanism. Now in that case, he has to raise a self invoice to him for that reverse charge he is liable to pay. So that invoice which is there being issued by himself by him for like a self invoice, so that will be a valid document to claim the credit. Then there is a bill of entry. Now the bill of entry, you are aware, that is being issued normally when we are importing something, that we are paying the custom duty and then we are also paying the IGST. So in that case, the bill of entry will be a document suffice to claim the credit as we are discussing. And finally, the input service distributor. What is this input service distributor? We are going to discuss later on also. But just to tell you here that, for example, I have the 10 different offices. My head office is in Jaipur. I incurred expenses of rupees 2 lakhs and paid the 18%, that is 36,000 rupees as in GST on that particular purchase. Now I want to distribute that 36,000 or rupees 2 lakhs among all the 10 different offices. Now the invoice which I will issue to transfer that credit is called as ISD invoice. So my dear friend, what I am trying to convey you, that either you should have an invoice or you should have any of these documents to become eligible to claim the credit which we are going to discuss. So the 2 conditions we have discussed. The first condition, that it should be related to your business. The second one, that you should have a relevant document. You should be possessing of a valid document to claim the GST credit. Now, my dear friend, when we have this kind of a document available with me, for example, I have a tax invoice. Now, the tax invoice, as given in the rules of the invoice, there are the 17 different requirements are there which has to be there on the invoice. For example, Atul Gupta is raising an invoice. So Atul Gupta has to see that whether I am giving all the relevant details on the invoice to be a valid invoice. So for example, I have to mention the HSN code, I have to mention this, that. Likewise, there are the 17 different requirements are there. But my dear friend, because at times there will not be all the requirements which will be fulfilled by a supplier, whether the credit will be denied, whether there will be a disallowance of the credit because there are certain points missing in the invoice. So to answer this, the department has issued a detailed circular, the notification number 39/2018 to guide for the rule 36 sub rule 2, that which ingredients should be compulsory and which ingredients are optional to claim the credit. Meaning thereby, even if the serial number of the invoice, which should be normally 16 character, if that is not having a 16 character. So there may be certain supplier who are issuing the invoice only for 10 character. Yes, for the supplier, it may be a bad invoice, but as a recipient of the service, the recipient of the goods, you are still eligible to claim the credit, even if there are not the 16 characters which are given on the particular invoice. Likewise, the GSTIN number of the supplier and recipient should also be there. But my dear friend, even if there is no HSN code, there is no quantity is being given, or that the, for example, the discount or abatement value is not given. Likewise, for example, the address of the delivery or the reverse charge basis is not mentioned. Digital signatures are not there. Still, you will be eligible to claim the credit. So what I am trying to convey you, that there are the two parts of the invoice. One is the invoice by the supplier. The supplier has to see that he is fulfilling all the requirements to issue a valid invoice. But to claim a credit, even if there are the certain deficiencies which are there in the invoice, you are still eligible to claim the credit based on the notification number 39/2018, which I try to summarize in this particular table for the benefit of all the viewers and the readers. So my dear friend, there are all these things are there, and you are aware that a newly inserted provision of the QR code, which is embedded into this invoice from the 30th of September 2020, has to be there on the invoice in case it is compulsory. So my dear friend, now we have covered the two particular aspects. One is that in case you want to become eligible, so I discussed you that there will be the 5 requirements. The first we covered that it should be related to your business. Second one, that you should be possessing a valid document to claim the invoice. Now, who all are valid and what is the validity requirement, that we have discussed in the last 5 minutes to explain you the second requirement. Now, my dear friend, coming to the third one, that the goods or services have been received by the registered person. My dear friend, it's a very, very important provision, because the number of times you are seeing that there are the cases against that, there are a lot of litigations going on when the department is claiming that, okay, it's not a genuine purchase. Actually, you have only the invoice, the goods are not being received, and that's why the credit is not eligible. That is exactly the section 16 subsection 2 the department is referring with. So my dear friend, it is very, very important that in case we want to claim a credit, the goods or the services so mentioned on that invoice should also be received by me. So say for example, Atul Gupta is buying something. I should not have only the invoice. I should have the goods or the services which is mentioned on the invoice should also be received by me to become eligible to claim the credit. Now my dear friend, there will be number of cases as well, because there will be the certain unique situation. For example, a bill to ship to model. So that is being given in the provision itself, that yes, there are the exception. For example, the A, as I given in the diagram, the A is billing to, say for example, Mr. B, and the B is selling the goods to Mr. C and requesting A that you please bill to me but directly supply the goods to the C as a bill to ship to model. So in that case, the goods will never come to Mr. B, or whether the B will be eligible to claim the credit, the answer is yes. Because in that case, though the physical inventory is not being received by B, but since it is a bill to ship to model, to make this business a viable business, ease of doing is offered being has to be there. There is an exception which is given under the section 16, that even if you have a bill to ship to model, the goods will be treated as being received. Now, my dear friend, there will be another case. There will be likewise for the services also, that even if the services are also being provided into the bill to ship to model, the credit will be available. Now, my dear friend, there are the certain exception to this particular provision as well. And then that is again, they have given a specific proviso that the goods received in lots and installment. But I am trying to convey you, my dear friend, when we are saying this particular provision, that the goods or services should have been received by the registered person, it is also being clarified that in case the goods are receiving in lots. For example, I want to buy, say, maybe the 20,000 plywood board from a particular supplier. The supplier told me that, okay, I can supply only 10,000 in a month. So I received the invoice on 20th of September and also the 10,000 plyboards. But the rest of the plyboards are being received in the month of October. Now, my dear friend, when I am eligible to claim the credit, whether I am eligible to claim the credit in the month of September or I am eligible to claim the credit in the month of October, the answer is that I will be eligible to claim the credit only in the month of October, when the last installment or the lot will be available in case there is there is a supply in the lots or installment. So my dear friend, please remember that in case your client is there which is receiving the goods in lots or installment, it will be the last lot or installment which will make the recipient eligible to claim the credit of the same. Now, my dear friend, coming to the next one, that is fourth condition is a tax charge on goods or services have been actually paid the government. Now we have discussed the three ones. So we have discussed that it should be related to your business. We have discussed that you should be possessing a valid document. And number three, the services or goods so mentioned on the invoice should be received by you in full to become eligible to claim the credit, with the exception that the bill to ship to model. Now, my dear friend, the fourth condition is that whatever the tax is being charged by the supplier. So, for example, A is there. He is supplying a goods of rupees 1 lakh to B and charge 18,000 rupees as GST. Now, it will be a pre-requirement that the A should deposit that 18,000 rupees to the government exchequer. So, unless and until he will not deposit, it will not get reflected in your 2A, that is the GSTN portal, the input credit ledger of yourself, and then only you will be eligible to claim. Yes, I will be discussing about certain legal judgments, the certain analytical part on that. But in case there is a technical lapse, there is a challenge about the financial viability or something like that, that can always be discussed. But in case the A who supplied the goods to B never deposited that 18,000 rupees to the government exchequer, in that case B will not be eligible to claim the credit of the same. That is the fourth condition which is given under the section 16 subsection 2 of the CGST Act. And the fifth condition, that the B who is looking to claim that 18,000 rupees credit should file his return to the department under the section 39, that is GSTR 3B. So unless and until the B will not file his return, he will not be eligible to claim the credit. Now, my dear friend, let us have a case study here. That, for example, Mr. D is there, who is having a credit of rupees 1 lakh. He is having an output liability of rupees 1 lakh also. So he is feeling that, okay, ultimately, even if I have to pay, it will be a nil amount because I have an output liability of rupees 1 lakh and I have a credit of rupees 1 lakh. So hardly makes any difference, even if I will not file the GSTR return, because ultimately it will be a nil output liability from my side. But my dear friend, as given in the eligibility part, that unless and until you will not file the return, you are not eligible to claim the credit. So what I am trying to convey you, that in case the assessee, the B, will not file his return, his output liability will be there for sure, because he have a output liability of 1 lakh rupees on the supply. But the credit will become subjective and will be denied by the department because he has not filed his GST return well in time. So in case he fails to do so, he can lost the credit, whatever the credit was there in his GSTR ledgers or the input tax credit ledgers. So my dear friend, what I am trying to convey you, that this is the very, very important for all of us to understand and communicate our client, that unless and until you will not file your return, you will not be eligible to claim the credit, even if you are fulfilling all the other conditions. So my dear friend, before I proceed to eligibility to claim to retain the credit, let us revise that what are the 5 conditions. So please note down, these are the 5 conditions to claim a credit, to become eligible to claim the credit. The first one, that the amount, the expenditure, whatever you are incurring, that should be related to your business. Number 2, you should be possessing a valid tax document, valid document to claim the credit. May it be the tax invoice, may it be the debit note, may it be the reverse charge invoice or the bill of entry or the ISD invoice. And what should be the ingredient of that invoice also, I tried to explain each one of you. The third one, that the goods or services which is mentioned on that invoice should be received by each one of us. The fourth one, the supplier should have paid the tax to the government exchequer. That should be getting reflected in the GSTR 1 or GSTR 2, ITC 2A. And number 5, that I am filing as a recipient of the credit, I should be filing the return. As prescribed under section 39 to become eligible to claim the credit. Now, my dear friend, once we have discussed that these are the 5 conditions. So say for example, I have a invoice of rupees 1 lakh on which I paid the 18,000 rupees as GST. In case that relates to my business, I will be eligible to claim the credit. In case that I have a valid tax invoice, no problem at all. The supplier paid the tax to the government exchequer, very good. I received the goods or services also, whatever is there on the invoice, and I file my return as well. But my dear friend, now the 6th condition is not about the eligibility to claim, but eligibility to retain. So what I'm trying to convey you, that even if you have claimed a credit, you have availed a credit, whether you will be eligible to retain that credit or not is also given under the section 16, which talks about that in case you are not paying to the supplier the value towards the amount towards the value and the tax thereon. So I just underline for the benefit of you the amounts towards the value and the tax thereon to the supplier of the goods or services within 180 days. So what I am trying to convey you, my dear friend, in case I say, for example, I have an invoice of on the 1st of January of rupees 1 lakh and 18,000 rupees is the GST. I have to pay to the supplier by 30th of June, not only this 18,000 rupees, the GST applicable on that, but the entire amount of rupees 1 lakh as well. So please try to understand that I have to pay 1,18,000 rupees to the supplier within 180 days to become eligible to retain that particular credit. So it is not that once you are eligible, you claim the credit, you can enjoy. No, if you want to retain that credit, you have to ensure that not only for the tax portion, but also the value of the supply that you have to pay to the supplier within 180 days from the date of invoice, whichever is there. So number one, that you have to pay within 180 days. Number two, you have to pay both the 1 lakh rupees plus 18,000 rupees. Number three, that in case you are not paying the amount. So for example, you paid 50%. So you will be eligible to claim the 50% credit, and you have to reverse the credit of the balance of the credit, 50% credit, for which you have not paid to the supplier per se. And then fourth, that you have to pay the interest as well, because once you have availed the credit, so you please remember that the interest is applicable even if you have not utilized that credit. So it is availment or utilization. In the service tax regime, it was availed and utilized. But in the GST regime, it is being mentioned the avail or utilize, rather than they have replaced the word and with the or, meaning thereby even if you have availed, but you are not eligible to avail because you have not paid within 180 days, you have to pay the interest from the day when you have claimed that credit. And my dear friend, we are talking about this 180 days from the date of invoice, not from the date of availing the credit. So there may be a case that, okay, on the 1st of January, the invoice received, you claim that you avail that credit, say for example, in the month of April. So when the 180 days will be counted, whether it's from April or from January, it will be from the January, that is the date of invoice. So my dear friend, these 4 or 5 things are there which are very, very important to note down, that in case you want to retain that credit, you want to utilize that credit, whatever you have availed, it is very important that we comply with the second proviso of the section 16, which talks about the payment within 180 days for the value as well as for the tax thereon. Now, my dear friend, for this particular provision, there are 3 exceptions as well. There are the 3 exceptions when this 180 days requirement will not be applicable, and very, very easy. That the first one, when you are paying the tax under the reverse charge. So for example, Atul Gupta is an advocate. I raised the invoice of rupees 1 lakh to Sushil ji. Sushil ji has to pay the tax under the reverse charge mechanism. Now in that case, he will issue a self invoice to him. He will use that credit. And in that case, payment of 1 lakh rupees to Atul Gupta will not be a mandatory requirement to retain that credit, because ultimately the government got the credit. So government is saying, thank you very much, I got the amount. Now you can claim whether you are paying to Atul Gupta or not. So hardly makes any difference in case it is a reverse charge mechanism. The second one, when there is no consideration, so what to talk about the payment? Yeah, for example, I am having a laptop available with me. I claimed the credit and now I am giving a laptop to my employees as a free. That falls under the schedule 1 as a supply. So in that case, since there is no consideration, it hardly makes any difference that whether there will be a 180 days requirement or not. And the third one, that the value of the supply which has been paid by the recipient on behalf of the supplier, it's again a bill to ship to model. For example, I buy from somebody and I supply to somebody. Now the supplier is paying directly to my supplier rather than to me, will be treated as being paid to me. So my dear friend, in that case also, there will not be any requirement that the supplier has to pay first to me and then I will pay to my supplier. So the recipient can directly, my recipient can directly pay to my supplier in case there is a bill to ship to model, and that will suffice the purpose of the 180 days requirement. So my dear friend, till now we have discussed about the eligibility and we have also discussed about the retention of the credit so claimed. So let us now have an example. Let us have a case study to understand this particular aspect. So Mr. A purchased goods worth rupees 1,18,000, on which 1 lakh rupees is the tax value and 18,000 rupees is the GST on the 1st March 2019, and also received the invoice on the same date, that is on the 1st of March, and availed the credit in the month of March itself. He paid to Y against this bill on the 1st of December. Now, my dear friend, as you are aware that as per the requirement for the credit so claimed on the 1st of March, he has to pay by 30th of August 2019. So there is a delay. Now there is a delay that he could not pay. So what does this mean? It means that you have availed a wrong credit. I am not talking about the utilization, whether you have utilized that 18,000 or not. Hardly makes any difference. I am talking about, as I mentioned you, it is the avail or utilize. It is not the avail and utilized. So when I have availed a credit for which I was not eligible because I have not paid to the Y within 180 days, not only I have to reverse the credit, but I have to pay the interest from the day when I first utilized that credit, first avail that credit in the month of March. So let us see the answer, that because this supplier, I have not paid in 180 days, 18,000 has to be added in my outward liability for the month of September 2019, because that was supposed to be the day when I should have reversed the credit. And then along with the interest calculated from the date of ITC availed, that is 1st of 2019 to the date of payment 1 of 12th 2019. So meaning thereby that I have to pay an interest of around 9 months, which will be there at the value of 18%. So my dear friend, it is very, very important to all of us. Please note down my request that as I mentioned you in number of programs, that it is very important for all of us to see that after 4 years of GST, now I should not be concentrating on the procedural part. I should not be doing a repetitive and the routine things which are there in the GST called as compliances. I have to understand the analytical part of the GST also to become a more valuable part of the entire, more relevant in the entire value chain. And that's why I am just sharing with you that when you are reviewing the liability or the credit vis-a-vis the credit of any client, you have to see that all the invoices on which the credit has been availed, whether the payments are made within 180 days or not. If the answer is not, then in that case you have to reverse the credit, but also you have to pay the differential amount, the interest on the amount so remain unpaid for the various suppliers. Now my dear friend, let us move further and take another example, because this will speak about the 50% payment. So Mr. A received goods worth rupees 1,18,000, again in this case, from B on the 1st of Feb 2018. Invoice date is 31st of January, credit availed on 2nd of Feb. A paid 59,000 rupees on the 31st March. So meaning thereby the half of the payment is made, half of the payment is pending, and the rest of the payment has not been made till date. So now even after a long period, the credit, they have not reversed, like they have not made the payment. So what I am trying to convey you, my dear friends, that in that case, since I paid the 50% payment, I will remain eligible to claim to retain that credit of 50%, that is 9,000 rupees, and I have to reverse the credit on the day when I was supposed to, the 180 days will be completed. So for example, the 180 days are getting completed on 20th of August, say for example. In that case, I have to pay the interest immediately after that when I am doing the reversal at the rate of 18%. So in this example, I have given you that, say for example, the 20th of August, they have given a reversal entry, and wherein 199 days are there, which are being elapsed after the credit so availed. I have to pay an interest of 800 something, which is being calculated in this particular slide. So my dear friend, likewise, the another conditions is there. So when we are talking about the eligibility to claim the credit, apart from that 5 conditions to retain the credit, I mentioned you, there is another requirement in relation to the capital goods. So for example, I am buying any capital goods. It's an old provision since 2004, when the service tax, in the service tax also the excise, this segment provisions were there, that in case you are buying a goods worth rupees 1 lakh on which you are paying a GST at the rate of 10%, say 10,000 rupees. So in case you are capitalizing your capital goods with 1,10,000, in that case the credit will not be available. But in case you are capitalizing the asset only with 1 lakh rupees and 10,000 rupees you are transferring to your input credit, then the 10,000 credit will be available. So my dear friend, it is very, very important to note down, they check the fixed asset register of the client, that in case they are capitalizing the tax portion also, in that case that will not be a valid credit available to the recipient, because he cannot have the two benefits. One side he is claiming the depreciation on that part, and the another side he is claiming the credit. That is not acceptable proposition, so that will not be available. Now my dear friend, as I mentioned you that there is another condition which is very important condition in the section 16.4 that talks about the up to when you can claim the credit. So for example, I have a invoice on the 20th of April 2021. So I feel that I will not be able to pay within 180 days. So I will claim the credit later on whenever I will pay. So let us not enter into this kind of a challenge that okay, if I will not be able to pay 180 days, who will have that kind of a calculations in hand? Who will manage that account, all everything that okay, when to pay, when not to pay? So I will claim the credit when I will be claiming the credit only when I will pay to the supplier. But my dear friend, there is a expiry date of every credit as well. So what I am trying to convey you that in case you are having a credit on the 20th of April, the last date to claim the credit, whether you are paying or not, irrespective of this fact, the last date to claim the credit will be the earlier of the following. That is the next year. That is, you are having an invoice on the 20th of April 2021. So for 21-22, you have to file a annual return. You have to file a annual return, and you have to file the continuous return for the next year also, that is 22-23. So my dear friend, for 21-22, you can very well enjoy that scenario that okay, you will not claim the credit, and then the payment will not be having, and that kind of interest and liabilities will not be there. But my dear friend, if you have crossed the month of September 2022, meaning thereby around 18 months. So in case you have crossed the month of September and the due date for the month of September 2022 is 20th of October, that is for the next financial year, or the date of furnishing the annual return. So let us assume that the date of furnishing of the annual return for 21-22, 21-22 के लिए जो आपका annual return का date है, let us assume that is 31st of December 2022. In that case, whichever is earlier, meaning thereby 20th of October or 31st December 2022, whichever is earlier will be the expiry date of that invoice, for which you were the credit was available on the 20th of April 2021. So what I am trying to convey you, my dear friend, all the invoices which are received in a particular financial year, the credit will be available maximum by the 20th of October next year. So you have to remember this aspect that in case you have any invoice for which you are eligible to claim the credit, but you are not claiming because of the certain compulsion that okay, you will not be able to pay the gentleman. In that case, you have to remember this aspect that on the 20th of October next year, the invoice will become infructuous, that in credit will not be available because that there will be an expiry date of each and every invoice. So what I am trying to convey you that even if, say for example, you have certain invoices are there, and you have claimed the credit, and now within 6 months you can always reverse the credit, so because you are not paying. In that case, you should reverse the credit. You should first claim and then reverse, and whenever you will pay again. So whenever you will pay to the supplier again, then you can reclaim that credit. So there is no time limit has been prescribed to reclaim the credit because you have reversed the credit because of the non-payment to the supplier. So once you avail, reverse and then reclaim whenever you will pay to the supplier is the right combination which I wish to convey you. Otherwise, what will happen that in case you lost that 180 days, this 6 months limit after the end of the financial year, you permanently will lost the credit, but otherwise which was you are eligible to claim. Now, my dear friend, this was all in relation to the eligibility part. So I just wish to summarize you that what we have discussed by this time, that we discuss about the 5 eligibility, that the credit should be related to your business. You should have a valid tax document, the valid invoice, valid tax paying document. The third one is that you should have received the services or goods mentioned on the invoice. The fourth one, we discussed that, okay, the supplier has paid the tax to the government exchequer. The fifth one, you are filing your returns as given in the section 39. Then the sixth one, that in case you want to retain that credit, you have to pay within 180 days to the supplier. Otherwise, you have to reverse the credit and you have to pay the interest. Seventh one, that you have received the goods in full. It's not in installment that okay, half of the installments are being received. And similarly, the condition is that you are eligible to claim the credit only till the 20th of October of the next year for all the invoices received in the previous financial year. So all the invoices which are pertains to 21-22 from the 1st of April 21 to 31st March 22, you are eligible to claim the credit say 20th of October of the next year, that is 20th of October 2022. So after that, you will not be eligible to claim the credit of those invoices which are having the dates pertaining to the previous financial year. So my dear friend, this was in relation to the eligibility part. Now, my dear friends, let us have a small case study just for the purpose of revision between each one of us. Now, my dear friend, A is a supplier who is registered in Delhi. He is receiving various goods and services. Let us analyze the amount of credit available and the reversal in case is required for the month of September. The first case is the goods worth rupees 1 lakh has been directly sent to Mr. A from B's premises on the direction of Mr. C. So what I am trying to convey you, it's a bill to ship to model. Goods worth rupees has been directly sent to Mr. A. So C is a buyer for B, and C is saying that since I have to supply the goods to A, you please directly deliver the goods to the A's premises. So in that case, whether the A will be eligible to claim the credit, the answer is yes. The A will be eligible to claim the credit because it's a bill to ship to model. So maybe we have to mention the C or A in a vice versa mode, but ultimately it's a bill to ship to model. The credit will be available. The second one, the services worth rupees 2 lakhs rupees has been received. The HSN code was not mentioned in the invoice. So whether I will be eligible to claim the 36,000 credit, the answer is yes, because I explained you under the notification number 39/2018. Even if the HSN code is not there in the invoice, it is a mistake of the supplier, but the recipient will not be in a disadvantageous situation that because the absence of the HSN, the credit will be disallowed. I will still remain eligible to claim the credit. So it is a right tick that I will be eligible to claim the credit. Now, my dear friend, goods worth rupees 50,000, on which 9,000 was the GST, was purchased and handed over to the transporter. It was 28th of September, but the goods received on the 3rd of October. So for the month of September, whether I will be eligible to claim the credit, the answer is no, because I will be eligible to claim the credit once the goods are received in my premises, meaning thereby on the 3rd of October. So I can claim this credit for my output liability for the month of October, but not for the month of September, which I try to explain through this illustration. My dear friend, another case is that the legal services received are on the 18th of Feb. 60,000 is the value, meaning thereby 10,800 is the tax, and the tax paid under RCM on the 20th of March, that is after 1 month. Credit has been availed, but the payment has not been made to the advocate till date. So he is saying that okay, 6 months is over. So whether I have to reverse the credit, the answer is no, because since it is a RCM, and in the RCM, I have already paid the tax to the government exchequer. So there will not be any requirement to reverse this 10,800 in spite of this fact that I have not made payment to the vendor, to the advocate. Now, my dear friend, there is a goods worth rupees 80,000 has been purchased, on which 14,400 was the GST. Invoice raised on 27th of March, credit availed on 7th of June, but the payment is not being made till date. So meaning thereby 6 months elapsed, meaning thereby I have to reverse the 14,400 rupees credit so claimed along with the interest, as the case may be under this particular example. So my dear friend, this was practically a revision of all the earlier slides we have discussed about the eligibility part of our input tax credit. Now, my dear friend, let us move further. And there are certain other requirements before I move to the section 17, which talks about the 2A, 2B reconciliation. As you are aware that the new requirement which is there from the 1st of January 2021, that in case the credit is not getting reflected in GSTR1, I will be eligible to claim only the 5%. So earlier it was 20%, then it reduced to 10%, and now it's 5%. Meaning thereby the credit which is reflected in the GSTR1, that ITC2A, then I will be eligible to claim the 100% of the same. But wherein the credit, I paid the supplier, but actually the supplier has not uploaded the detail, in that case, I will be eligible to claim only the 5% credit, and the rest of the credit will be on hold till the time the GSTR 1 is not being filed by the supplier. So my dear friend, there is always a case, there is always a question, there is always a apprehension that if the gentleman, the supplier will not upload his return, not upload his details till the October 2022 for the 21-22. So whether the entire credit will lapse, because ultimately I will be eligible to claim the credit only when it will be uploaded on the returns. And in case he will upload the return after that such a considerable time, then whether I will lose the credit, the answer is yes. So my dear friend, before I now we should move to the next section of the GST. This is related to the input tax credit, and that is section 17. Now my dear friend, after the eligibility part that we discussed, now we are going to discuss about the so one is this, that I am eligible to claim the credit. So whatever the credit is available to me, I am eligible to claim the same. Now in case I am dealing in the taxable or exempted supply, I am into a banking company or a NBFC companies, because banking companies have some taxable supplies, some exempt supplies are there. So how much credit will be available to me is a question, apart from certain credits which are exclusively block credit. So we are going to discuss in this particular section, that the credit which is not related to business, which is not related to the business, I will not be eligible to claim. In case there are certain taxable supplies which are zero rated supplies or which are exempt supplies, then I have to claim the credit in the ratio of the taxable vis-a-vis exempted supply. We will also learn that the various activities, say for example, I have the 10 different type of supplies which will fall under the exempt supply and which will fall under the taxable supply. We will also try to learn. We will discuss a unique case of a banking company or the NBFCs, and finally the credits which are specifically blocked. Now let us start with the first part, that is the credit for the business and the non-business purpose. So my dear friend, in case I have a certain credit which is not for the business purpose, the ITC will not be available. But in case the credit is for my business purpose, the ITC is available. So I will not devote much time on this. Let us move straightway to the next slide. Now my dear friend, as I mentioned you that in case I am dealing in the taxable and exempt both type of supplies, in that case the rule 42 and 43 clarifies that I will be eligible to claim the credit in the ratio of a taxable supply vis-a-vis the total supply. So for example, I have a 40% taxable supply. I will be eligible to claim the 40% of the credit whichever I am eligible for. So though I am eligible for all the invoices to claim the credit, but since my turnover ratio is 40% taxable, 60% exempted, after the eligibility test is over, I will be eligible to claim only the 40% as given in the rule 42. Now my dear friend, what all will fall under the taxable supply, what all will fall under the exempt supply is something that we need to learn. So for example, there is a taxable supply, the ITC will be available. As you are aware that in case I am doing exports and exports are treating as a zero rated supply, still the same will be classified as a taxable supply and the ITC will be available. But in case there are certain taxable supplies which are not taxable at all, for example, the petroleum products are there. There are certain supplies which are exempt supplies specifically under notification number 12/2017, and then there are the nil rated supplies where the rate is there 0, 5, 12, 18, 28. So when there is a nil rate, in that case that supply will also be treated as exempt supply and the credit will not be available. So my dear friend, after this understanding, let us have an illustration for all of you. So now I am looking for I believe that this is also having a chat facility, and just a second please. Technical team, we have the chat box here, na?
Sir, this chat will not be visible to all the participants. The question answers, they can post their answers in that link. You'll have to check that question link. There the participants will be able to post the answer.
Okay. So now, Smita ji, I have a question that Mr. X is having the following turnover 2021. The supply attracting rate of 18% is 5 crore. The supplier attracting GST at the rate of 0% is 2 crore. There are exports with a 0 rate 3 crores. There are supplies specifically exempted under the GST 5 crore. He is having a shares purchase. He sold shares worth rupees 100 crore. He is into the sale and purchase of shares and purchase shares worth rupees 98 crore. There is a profit of rupees 2 crores. Now my colleagues here, the viewers here, they has to give us that, okay, they have to calculate themselves what will be the value of the exempt supply versus taxable supply. So any guesswork if they want to do? Each one of us, all the readers can do this exercise at their own level because there is no chat facility available and you can do your own calculation and then I will show you the answer. I am taking a pause for a minute for the benefit of each one of you. You just calculate for yourself. So my dear friend, let us move to the answer because we have a very short time. Just to share with you, the supply attracting 18% will be a taxable supply. So 5 crore will be a taxable supply. Supply attracting GST at the rate of 0% will be treated as exempt supply. There will be a 2 crore exempted supply. Supply of exports with a 0 rate will be a taxable supply. Supply exempted under GST will be exempted. And in case of a sale of a stock or shares, as you are aware that they have given us a particular formula that the 1% of the sale value will be treated as exempt supply. So is irrespective of the profit and there will be the 1 crore which will be treated as exempt supply. So my dear friend, in this particular case, the 5 plus 3, this will be a taxable supply and this 2 plus 5 plus 1. So this will be a exempted supply. So total 16 crore out of 16 crore. Though the turnover may be having a different value, maybe you can say the 15 crore is this and plus 100 crore is this sale of stocks are there. So the total value of the turnover may be 115 crore. But for me, for the GST purpose, we have only the 16 crore as a turnover, 8 crore taxable and 8 crore exempted, meaning thereby whatever the credit will be available, the 50% will be available as we are going to discuss in the Rule 42. So my dear friend, let us understand as I explained you that again I am going back that we have to calculate the taxable vis-a-vis the exempted supply. Now my dear friend, as given in the section 17, there are the certain guidance for the how do you value that exempt supply. So there are the certain exempt supply, for example, the supply on which the recipient is paying the tax under reverse charge mechanism. So, my dear friend, when I am as an advocate, Atul Gupta is raising an invoice of rupees 1 lakh and 18,000 is the GST. 18,000 is the GST which the Sushilji is paying to the government exchequer. In that case, for Atul Gupta, this will be an exempt supply because the entire tax is paid by the Sushilji. In that case, it will be the Sushilji who is eligible to claim the credit. I will not be eligible to claim any credit because entire tax is paid by him. So, when I am raising an invoice under which the recipient is liable to pay under reverse charge, for me, it is an exempt supply. My dear friend, then coming to the transaction in securities, as I explained you, the value will be 1% of the sale value. So 100 crore, as I mentioned you in the another example, this 100 crore supply sale of securities, the 1% will be the exempted value as given in this formula. So in case you are transactioning security, the 1% of the sale value will be treated as exempted. Likewise, my dear friend, the sale of land. As you are aware, the sale of land is neither treated as a goods nor treated as a service. But as you are aware that when we are paying when we are taking the exemption of the sale of land in the total value of the any contract as given in the para 5B of the schedule 2, that is the builder's services. When the builder is supplying certain goods, there is exemption available for the 1/3 abatement is there like that, that will be treated as an exempted portion for that particular purpose. Now, likewise, my dear friends, that in case NBFC is there or a bank is there which is accepting deposit or extending loans and whatever the advances are there, and they are charging certain interest. In that case, that interest portion will be treated as exempt supply, and likewise for the transportation of goods by the vessels from the overseas part, that is from custom station of India to outside, whatever the freight charges are being claimed, that will also be treated as an exempt supply. So my dear friend, these are the certain inclusions in the exempt supply. We are having a specific case for the banking sector also, but that we will discuss you later on. We will come back and then we will discuss that, okay, specifically about the banking sector. Now, my dear friend, as I mentioned you in my presentation, that we will be discussing about the credit which will be available in case you are dealing in taxable or exempted, how the ratio will be there. But there are certain inclusions we are going to discuss in the exempt supply, and then we will be discussing banking. I will discuss later on, and now we are going to discuss about the block credit. So let us start with the block credit as I discussed with you. And the first block credit is about the credit related to your motor vehicle. So my dear friend, in case I am a chartered accountant and I'm buying a motor vehicle, I will not be eligible to claim the credit of GST paid on such purchase of the motor vehicle, though there are certain exceptions that in case I am also dealing in the motor vehicle. So if I am buying the motor vehicle, I am selling the motor vehicle, I will be eligible to claim. In case I am doing a transportation of passenger, so in case there are the vehicle which is having a more than 13% capacity, and for example I am buying a bus, so I will be eligible to claim the credit in case I am offering the transportation services to the passenger through that bus. If I am using that bus for my own employees, then the credit will not be available. But in case I am using for the purpose of the transportation of passengers, in that case the credit will be available. Likewise, in case I am imparting a motor driving vehicle, say for example some motor driving college is there, then the credit will be available for that purchase of motor vehicle. Now my dear friend, likewise, since I am not eligible to claim the GST on the purchase of that motor vehicle, I will not be eligible to also on the service part, insurance, repair and maintenance of that particular vehicle. So neither the credit related to purchase of motor vehicle will be available, nor the insurance, servicing, repair or maintenance of that particular motor vehicle will be available. My dear friend, then we have certain other block credits are there. There is a credit related to food and beverages, outdoor catering, beauty treatment, health services, health insurance, and the rent a cab, like that. So for these also there are the specifically disallowance of the credit is there, that you are not eligible to claim the credit. So for example, you are buying the food for your canteen of your office, you are not eligible to claim the credit of the same. So my dear friend, I just wish to remind you that you have to understand this provision well, because I am going to have a case study on this aspect and I will be looking the answer from each one of you. Maybe you will mention in the QA part or otherwise that whatever the facilities are available, that I will be asking you a practical question on this particular aspect. So my dear friend, now so food and beverages, outdoor catering, beauty treatment, health service, rent a cab credit will not be available in general, but there are the specific case when the credit will also be available. So for example, my left hand and right hand are doing the same thing, meaning thereby that in case I am into the food and beverages business, so I am buying the food and beverages and I am selling the food and beverages, in that case I will be eligible to claim the credit. I am into the outdoor catering, I am taking the outdoor catering services and delivering the outdoor catering services, in that case the credit will be available. I am buying the health insurance and I am selling the health insurance, the credit will be available. I am buying the rent a cab service and supplying the rent a cab service, in that case the credit will be available. So my dear friend, in case my left and right, both the hands are doing the same activity, the similar activity, the similar nature of activity, in that case the credit will be available. In spite of the otherwise, the credit is blocked for the journal assessee. My dear friends, similarly, the credit related to membership of a club or a health or fitness center, or in relation to the LTC of the employees, the credit will not be available as given in the section 17 subsection 5. My dear friend, further block credit is there in relation to construction of immovable property other than plant and machinery. So in case I am taking the services of immovable construction, for example, I am getting my office constructed, in that case the credit will not be available for the construction part, but if I am deploying certain plant and machinery in my office, I will be eligible to claim the credit. So for example, I am taking the photocopier machine, in that case the credit will be available. My dear friend, here again there is a catch available. There are two catch. That one is that in case I have the both the side the same line, that I am taking the works contract service and I am rendering the works contract service. So I am taking the works contract service and I am supplying the works contract service. In that case, the credit will be available. Now, what will be the case like this? For example, I am a builder. I am taking the works contract service from a contractor and I am also booking the flats from a prospective customer. In that case, my classification of my output service will be the works contract service. So meaning thereby I am taking the works contract service and I am also supplying the works contract service. In that case, the credit of the GST so paid to my contractor will be available to me against my output liability, which I have charged from my customer, subject to the conditions, other conditions which are there in the real estate sector. Now another one, that the construction includes the reconstruction, renovation, addition or alteration or repair, meaning thereby not only the credit is denied for the construction of my office, even if I am getting some alteration, repair also, then whatever the GST I have paid to the works contractor, the credit will not be available to me. The credit will not be available to me, neither for the purchase of the material nor as a works contract service. But in case I am taking only a service portion, in that case there are the certain exemption, the certain provisions are there wherein I can claim the credit. My dear friend, there are again certain other aspects of the block credits are there which we should understand. That for example, I am taking the certain purchase from a customer, from a supplier who is under the composition scheme. So in that case, whatever the tax is there on that particular composition scheme, I will not be eligible to claim the credit in that particular case. Similarly, in case I am using certain goods for the personal consumption, the credit will not be available. My dear friend, there is a very, very important aspect which we should note down here. That is point number H. That there are the two type of loss in the normal way in the business. One is a normal loss, the another is an abnormal loss. Evaporation of the, say for example, the evaporation of a diesel or a petroleum product. Say for example, I am buying the 100 a liter of crude oil. Automatically after 1 month or 15 days, 1 liter will get evaporated because in the system. In that case, it will be treated as a normal loss and I will not require to any reversal of the credit. But in case there are the goods lost, stolen, destroyed, which are abnormal in nature, in that case, the credit I have to proportionately reverse the credit for the such lost, stolen or the destroyed, or by way of, if I am disposing of by way of gift or the free supply. Now, my dear friend, I just share with you an example that today we are facing a challenge of the COVID pandemic. Now, I am a manufacturer of a oxygen concentrator. There was a COVID help center was there. So I decided to donate 10 oxygen concentrator to particular that COVID care center. In that case, there will not be any GST on that gift, that donation which I am giving to the COVID care center. But since I have used certain credit for the manufacturing of that concentrator, I have to reverse that portion of the GST wherein I have supplied the concentrator free of cost to a COVID care center. So I have to reverse the proportionate credit because that will be treated as an exempt supply, and I have to reverse the proportionate credit into that particular used for the purpose of such oxygen concentrator. Finally, my dear friends, there are certain reversal, there is a certain block credits are there wherein I am paying that GST under section 74, 129 and 130. These are the charges where the mala fide intentions are there. There are the confiscation of the goods or the search and seizure is there. Now, my dear friend, as you are aware, under the old provision of Senate credit, there was a rule 9BB, wherein the similar provisions were there that, say for example, A is there which is supplying the goods to B. Both of them agreed that okay, this is not subject to the GST. After a period of say 2 years, the department visited A premises and charged him with the concealment of facts or the malafide intention. Now, in that case, the A is not only the paying the tax but also paying the penalty under section 74. Now, he is claiming that amount from B because that was a mutual agreement between A and B. Now, whether the B can claim the credit of the amount so paid to A, the answer is no. So, in that case, since there is a charge against A for section 74, 129 and 130, now even if he will pay the tax to the government exchequer, he will not be eligible to claim the credit for the such payment made to the government. That is being explained under section 17.5 through section 74, 129 and 130. Now, my dear friend, these were the various aspects related to the block credit vis-a-vis that how you have to claim the credit. Now, my dear friend, before I move to the practical illustration, let us have some case study to help you out. My dear friend, there are the 7 judgments which I have attached for the benefit of each one of you. That at times you will find that A purchased the goods from B. B is having certain financial hardship. So it is not the case that there is a no supply of goods to A. That is well proved. That A has genuinely supplied the goods to A. The B has genuinely supplied the goods to A. But B is having certain problem in payment of tax to the department. So whether the A will be eligible to claim the credit or not. So my dear friend, here we have to differentiate between the evasion or the technical difficulties. So in case the B is having a technical difficulties, the financial difficulties are there and he is not able to pay the tax. Though A has paid the tax to the B, as per the judgment which I have attached for the benefit of my readers and my colleagues here, the A can very well claim the credit. But if it is being proved that the goods were never supplied to B, it's a fake transaction. In that case, A will not be eligible to claim the credit. So aspire for. So my dear friend, we have to read this judgment very judiciously, cautiously, and understand the thinner point that okay, when I will be eligible to claim the credit in spite of this fact that my supplier has not paid, transfer the tax so collected to the government exchequer. Likewise, another judgment. When we have to reverse the credit in case of a loss or wastage, is something again was a challenge and a matter of litigation between the department and the assessees. Somebody will say that even the natural evaporation, you have to reverse the credit. To help our members, our colleagues, I just noted this judgment for the benefit of each one of you, wherein it is being clarified that for the calculation of reversal of ITC on wastage, assessing officer was required to ascertain that what amount of quantum of loss and uniform or ad hoc percentage cannot be adopted. So not only you have to see that whether there is actual loss. So you cannot say that okay, let us 5% loss will be treated as a 5% loss and then you have to reverse the 5% credit. No. You have to assess the actual amount and then you have to see whether it is abnormal loss or a normal loss. The third one. You are aware that in the hospital, there are the 2 types of patients. One is the IPD patients, which are internal patient, and there are the outpatients that okay, somebody coming and buying the medicines from the pharmacy. Now, there are the IPDs, meaning thereby the inpatients are there. When the medicines are supplied during the treatment of the patient, since they will be treated as a bundled service, composite service, and will not be subject to the GST. And with the same analogy, it is being clarified that the credit on those medicines which are supplied to the IPD and on which no GST was being charged, the credit will also be not be available. So it's a logical way of understanding the law, and there is a judgment, there is a ruling from the authority for advance ruling from the Karnataka, which is being given here for the benefit of my colleagues. My dear friend, when we are discussing about the construction part, that the construction of the credit will not be available in case, say for example, I am getting constructed my office. There was another case when the cooperative society was getting constructed their flats and they purchased the lift. So now whether the credit of the lift will be available or not, again there is a judgment, there is a ruling given by the Maharashtra Authority for Advance Ruling, and they explain that the credit of this lift will also not be available to the cooperative housing society. My dear friend, as we have witnessed the recent judgment, recent clarification given in the GST Council meeting, that the builders are now eligible to transfer the flat to the landowner before the completion certificate, so that the landowner can also claim the input credit so paid to the builder. Similarly, there are the another aspect about the claiming of the ITC after the receipt of the completion certificate. So when the completion certificate is being received, there are the flats which are out of the GST levy, but there are again supplies which are within the GST levy. So when the department try to say in some cases that the credit will not be available, there was a authority of advance ruling from the Gujarat clarified that the builder will be eligible to claim the credit in a proportionate method even after the receipt of the completion certificate. My dear friend, as we are discussing about the case for the purchase of the bus and whether the transportation of the employees to and fro, the credit will be available or not. Normally, even I mentioned that the credit will not be available unless and until there will be a transportation of a passenger. But just for the benefit of my colleagues, I wish to draw attention on the advance ruling, wherein it is being clarified in the Maharashtra Authority for Advance Ruling that the credit of the purchase of bus will be available even if the bus is used for the transportation of employees to and from the workplace. My dear friend, likewise there is another judgment. When the lease charges are being paid for the land which is being used for the construction of own building, as it is being explained in the Authority for Advance Ruling Telangana, that the credit of such lease premium charges paid will not be allowed. Now, my dear friend, after the judgments and certain Authority for Advance Ruling opinions, let us conclude this session with, or I will say the portion of this session, with a case study. As we have discussed number of things till now, that we discussed about the eligibility part, that when the credit will be, somebody will be eligible to claim the credit. Then we discussed about the block credit vis-a-vis the proportionate credit, that how we have to claim. What will be the definition of a block credit vis-a-vis, what will be the definition of an exempted supply vis-a-vis the taxable supply. What all block credits are there, that also we discussed in the various previous slides. Now based on that, I have a specific query for all of you, and wherein I expect that I will be getting the right answers, because already we have crossed through the 4 years after the introduction of the GST. So this is a question before each one of you. I will request the office to help me out, to guide me that how I will be able to see the answers of our viewers, that in case they want to give the answers, maybe you can share with me that what all our answers are coming or where I should check. But let us understand the question first. My dear friend, you have to calculate the credit which will be available to XYZ. My dear friend, XYZ is having a turnover of rupees 10 crore, 7 crore is a taxable supply, and 3 crore is a exempted supply. Now for this 10 crore supply, wherein the output liability is, say for example 1 crore 80 lakhs, or in the 7 crore it will be 1 crore at the rate of 18%, let us assume. So it will be 1 crore to 1.26 crores. The total input credit available is 80 lakhs. Wherein the 80 lakhs has the different ingredients. Out of this 80 lakhs, 5 lakh credit is there, which is exclusively for the personal consumption. Likewise, there is a 5 lakh credit which is being paid for the warehousing services used for my agriculture produce. XYZ wish to get their office constructed and pay 20 lakhs rupees on the building material used for the construction. They also paid on which the 10 lakh rupees GST was paid. But to remind you that the XYZ is also providing the works contract service. XYZ purchased a motor vehicle, paid 2 lakhs rupees as GST, and the vehicle is used for the transportation of passengers. XYZ, out of this 80 lakhs rupees, 2 lakhs credit belongs to the food and beverages. The goods so purchased by XYZ, there was a theft and the GST, so goods were stolen, wherein the 6 lakhs rupees GST was involved. And there was a 20 lakhs rupees credit which was exclusively related to this 7 crore taxable supply. Now you have to tell me that how much credit will be available to XYZ out of this 80 lakhs rupees, for which I have shared you all these ingredients. The turnover is available to you. We have to go to the formula for rule 42 and tell me that how much credit will be available to XYZ. Over to all of you for your answers. Office, please help me that how I can see the answers.
Sir, you can check the answers on the question link, the link which we have shared, where you can see the questions being put up by the participants. They can post their answers on that link itself.
So this is available in the Blue Jeans only.
So you'll have to open that link in a different browser. Should I forward that mail again? That link having the questions wala?
If you can WhatsApp me or otherwise, I will be check on the mobile only.
Okay, I'll share that in the WhatsApp, sir.
Amita ma'am, आप just sent sir.
Okay, thank you.
Ajay ji, I have not received any link.
Received email just now from GST in that gst@ICAI.in.
Mail किया है? Okay.
ये जी व्हाट्सएप भी कर दो ना, लिंक एंड यूजर आईडी पासवर्ड.
Sure sir.
I'm getting the answer. So Ayush Jaju has given the answer. Jagdeep ji, 32 lakhs is the wrong answer. So Keshayam, 30 lakhs is the wrong answer. 44 lakhs is the answer, wrong answer. Sonal Jain, answer wrong is there. Rajindra Vahalji is the wrong answer. We have another colleagues from PM Lokhande. CAPM Lokhande, 30 lakhs is the wrong answer. AK Singh ji, 20 lakhs is the wrong answer. Aman ji, wrong answer. Ramesh ji is wrong answer. TA Sachin Rajput ji, wrong answer. Abhay Sarode, wrong answer. Animesh Gupta is wrong answer. So, दिलीप सोमानी जी, आपका आंसर भी गलत है. विवेक KR गोयल, आंसर इज रॉन्ग. हितेश एन गुप्ता जी, VKCA, दया, आंसर इज नॉट गिवन. मनोज गुप्ता, रॉन्ग आंसर. PCA अग्रवाल, Parveen Agarwal, wrong answer. So we have received only the one right answer by this time. Ayush Jaju has given the right answer. Otherwise, all answers are wrong. Then we have a yes. So I believe that our colleagues are giving the wrong answer. Better that I should move to the answers. After that also I have received a lot of answers, but unfortunately all answers are wrong. So I have received around 40 answers, 45 answers. Only one answer is right. So let me show you the answer, how it will come. So my dear friend, let us understand that to answer this question, first of all, we have to understand the certain terminologies. As the total credit which is available in our system is called as T. We have given certain terminology T1 to the credit which relates to non-business purpose. There will be certain credits which are used exclusively for exempted business. So I have an exclusive credit for exempted business. I have a common credit used for exempted business. So exclusive is called T2. You are aware about the 17.5. So as given in the section 17 subsection 5, the certain credits are there which are block credit. So that is called T3. Then we have a credit called T4, which means the credit exclusively for taxable business, 20 lakhs rupees in our example. So C2 is called as common credit. Now out of this common credit, try to understand that there are the three different type of credits are there. There is a credit for exempted business. Then we have there is again a credit for the taxable, out of the common credit, you will have the credit for the taxable purpose, and then you have a credit in the common credit for the non-business purpose. So the non-business purpose will be D2. The credit which is related to your exempted activity will be treated as D1. And what will happen? That after the D1 and D2 will be reduced from C2, the credit which is related to your taxable business will be the C3. So we have to calculate the C3. Practically the credit which will be eligible will be C3 plus T4. So this is the way that we have to calculate. Again, I will try to share you through an formula given in the rule 42. So once you have the T1, T2, T3, you will calculate first the C1. C1 will be equivalent to T minus T1 plus T2, T3. meaning thereby that you will be calculating the common credit as well as the taxable credit for exclusively taxable. Now out of the C1, if you will reduce the T4, that is the C2. So C2 formula will be practically the C1 minus T4. You can directly go to the C2 as well, no issue at all. So out of this C2 will be a common credit, and from the C2, as I explained you, you have to calculate the D1 as I have given you. You have to calculate the D1, you have to calculate the D2. Now the D1 formula is given under the rule itself, that is exempted turnover divided by total turnover multiplied by C2, that is 3 by 10 in our case, multiplied by C2, whatever will be the common credit. And for D2 they have given a state formula, state jacket formula, which is used by one of our colleague who is comparatively a young chartered accountant, that is 5% of the C2. If you are doubtful on this particular clause, step 9, you please refer the clause J of the rule 42, you will get the answer. So the 5% of the C2 is the D2, and then out of this, if you want to go to C3, because this is a credit which is available to you, so C3 plus T4. So for C3, it will be the C2 minus D1 plus D2. So this is the formula. Now let us understand in our example, what is this C1, C2 and all these things. So 5 lakhs, as I explained you, will be a T1, which is exclusively for personal purpose, and 5 lakhs will be the T2, that is agriculture business. Agriculture business, exempted business. Exempted business, credit used for exempted business is exclusively for exempted. So T2. Then 20 lakhs rupees is the credit used for building material, which is for office purpose. Credit will not be available. Block credit 17.5 is a T3. 10 lakh credit used for works contract service. I am also rendering the works contract service. Credit will be available. So not to worry, it's a common credit. Motor vehicle credit will be available as we discussed, that is for the transportation of passenger. But the food and beverages credit will not be available as it is a block credit. I am not in the food and beverage business. And the goods which are stolen from the site, there is a abnormal loss. So the credit I have to reverse for rupees 6 lakhs. Again, it's a block credit. So how much is the block credit? 20 plus 2, not this 2, this 2 and 6 lakhs. So practically this 28 lakhs will be a block credit, and T4 will be 20 lakhs, which is exclusively for taxable business. So let us do the calculation. So total credit T is to 80 lakhs. T1 is 5 lakhs, as I mentioned you, for personal purpose. T2 is 5 lakhs, agriculture, warehousing. And the T3, that is block credit, is 20 plus 2 plus 6, 28 lakhs. So C1 will be T minus T1 plus T2 plus T3, meaning thereby C1 is 42, and from the C1 I have to reduce the T4 to arrive at the common credit. So what will happen? The C2 will be 42 minus 20, that is 22 lakhs. So my dear friends, let us have a pause here. This 22 lakhs is a common credit, and out of that I have to reduce the D1 and D2 to arrive the C3. Now the D1, D2, we are aware that the D1 formula is E oblique F multiplied by C2. E is 3, F is 10, F means total turnover. Common credit is 22 lakhs, meaning thereby 6 lakh 60,000 is the credit out of the common credit, which is used for exempted purpose. Same way, D2, that is the credit for non-business purpose. Formula I have given you earlier, 5% of the C2, meaning thereby 1,10,000. So for example, you are using the telephone for calling your home. So it's a credit which you have taken, and wherein the 5% is being treated as a personal purpose. So what will happen? That out of this 22 lakhs rupees, I will reduce this one and this one, and that the 14.30 lakhs will be a credit which will be a C3. So this common credit used for business purpose, taxable business purpose will be, so this is C3. And credit which I am eligible to claim is C3 plus the T4, that is 20 lakhs. So the total credit for which I am eligible out of this 80 lakhs is 34.30 lakh, wherein the one right answer has been given by our one of the colleague. I just wish to appreciate him from this platform. Then we have received Felix D'Souza has also given the right answer later on. But I'm just sharing you the first name which is given the right answer is Ayush Jaju. So thank you Ayush for a wonderful answer. Otherwise I received around more than 100 answer and most of them. So I will not say each one of them, but I have the some Rajiv Bhatnagar also has given the right answer. We have Pinky Goyal who has given the right answer. We have Lata Bhandari ji who has given the right answer. Apart from these four colleagues which I named here, otherwise all the others have given the wrong answer. So there may be some interpretational issues because we feel that okay, D2 will not be applicable here or something like that. But when we are getting the answer up to the level of 62 lakhs or like that, again we need to introspect that after a period of 4 years, how much we are prepared enough, because we are giving the 13 lakhs rupees as the answer, whereas 20 lakhs is the state T4. But one of our colleague is given the answer only 13 lakhs credit will be available. So that is a worry I carry with me, that we have to be more experts in the interpretation of the law rather than we are doing only the compliance activity. So that is something that we need to deal and deliberate. Now, my dear friends, we have very less time available with us. This presentation I will be sharing to my colleagues in the Indirect Taxes Committee who will upload this on the portal, and so that you can take the benefit of the same. This particular capital goods related provision I have already discussed with you, but I am not bothering you here, but I am giving you something that the similar calculation is required for the capital goods also. There are the cases when the capital goods are used for the business purpose, later on used for the exempted purpose, so we have to proportionately reverse the credit. Same way, there are certain capital goods which are earlier used for exempted business, later on it was being shifted to the taxable business. In that case, how to claim the credit? There are the third case, when the machines are used partially for taxable, partially for exempted. In that case, how to claim the credit is something that we should learn. I have prepared an illustration for the same as well, wherein you can see that this formula is talking about that how to calculate the eligibility to claim the credit for a particular month, and the question is given, and for that the answer is also given in the presentation, so that later on you can go through and understand that how to calculate this credit on the capital goods for the cases where the both are machines are used for a partially taxable, partially exempted, or may moved from one bracket to the another bracket at a later point of time. So my dear friend, this was in relation to the capital goods. Now I will touch upon the two balance topic in the the credit provision. The one is in relation to the special cases. Then we will be discussing about the ISD. And then over to all of you for your question answer. I will try to answer few questions whichever, like I have got the link of all these questions. I will try to answer the questions which are being raised by each one of you. Though there are, we have around responses 386, but there are certain answers as well. So still we have around 200 plus questions. But I will try to see that how many questions I can answer at the earliest way. My dear friend, let us understand this aspect, section 18. Section 18 is a unique case when there is an SSC who is not registered with the department. First time his turnover is crossing 20 lakhs rupees. Now there are certain credits available to him which are intended to be used for the taxable business. So whether they and he is having an opening balance of credit on the day when he is taking the registration. So whether he will be able to take that pre-registration credit. So this is something that we need to learn. Same way, somebody is taking a voluntary registration after crossing a turnover of rupees 5 lakhs only. He want to take the registration. So on the appointed date, when he is applying for the voluntary registration, if he is having certain credits available, whether he can claim the same or not.
then somebody is moving from a composition scheme to a normal scheme. So whether he will be eligible to claim the credit or not. And there will be a case when somebody is supplying the exempted goods or service, and now that become taxable. So on that appointed day, when the notification issued to make a particular goods or service as taxable, whether the opening credit will be eligible to claim or not. So answer has given in the yellow mark that in these two cases, it will be only the input credit which will be available. But in case of the composition schemes to a normal scheme, the assessee can claim the credit of both input and the capital goods. But my dear friend, for that, they have to, so we have given a formula also to how to calculate this. But my dear friend, for that, the assessee has to file a ITC 01 for claiming such credits. And in case that is more than rupees 2 lakhs, then they have to obtain a certificate from a chartered accountant to claim such credit. So in case you have a pre-registration credit is there more than 2 lakhs rupees, you want to claim, you have to file a ITC 01. Same way, there are the mergers, acquisitions are there, and you want to shift the credit from an old company to a new company, then also you have to file a ITC 02. Credit is more than 2 lakhs rupees. No, so it's not a 2 lakhs rupees here. In that case, you have to take a compulsory certificate from a chartered accountant before filing the ITC 02. My dear friend, then we have a reverse case also, that the registered person who was in the normal scheme become a composite supplier, or goods or services which were earlier taxable become the exempt supply. So it's a vice versa case. In that case, they have to reverse the credit, whatever the credit is there on the appointed day, and for that they have to file a ITC 03, and again they have to obtain a certificate for the same from a chartered accountant. So my dear friend, these were the special cases which I wish to discuss with you. There are 4 these cases, and I discussed the 2 cases here. So practically there are the 6 such cases which we should understand, need to comply with. My dear friend, then we have a certain, I have a lot of case studies. I wish to have the time to discuss all you, but nevertheless, we have discussed enough case studies by this time. For the banking sector also, I have explained you that there are the 2 options available. Either they can go with the formula 42 which I have given you, or they can go directly the 50% credit, they can eligible 50% credit, they can reverse. But they have to use that scheme on a year-to-year basis, and there are some other exceptions. Now, my dear friend, before I move to the query sessions, I have the last deliberation here on the ISD. Sushilji, you will take the questions or I have to take? So, my dear friend, for the ISD, as I explained you, that there is a head office, there are the 10 different branches are there. The head office is taking certain services wherein the output liability, the head office is not having any output liability. So the credit is lying unutilized. They want to distribute the credit to their branches, to their factory, so that they can use that credit and take the benefit of the ITC system. Now, when they are distributing that credit, what will be the formula, how to distribute, what will be the manner of distribution, is something we need to learn. So there are the 2 aspects. One is how to distribute, and the another is that what to distribute. Now, when we are saying what to distribute, the department has given the 3 different scenarios. When a particular credit is there available to the ISD, but that relates to a particular branch, then it should not be distributed among the other branches. But in case there is a credit which relates to, say for example, 3 branches, in that case, that credit should be distributed among 3 branches only in the turnover ratio of the 3 branches. But in case there is a credit which is attributable to all the branches, in that case, in the ratio of their turnover, the credit should be distributed by the ISD. Now, my dear friend, when you are distributing this manner, how you will distribute, say for example, you have a credit of the CGST. So my dear friend, in case you have a CGST credit, let us take an example of Allahabad. We have a head office in Prayagraj. We have office in across the 10 different states, including in the UP as well. So in case you have a CGST credit available in Allahabad and you want to distribute among all the states, including UP itself, So the credit from UP to UP will be a CGST. But in the case the credit is coming from UP to MP, it will become IGST. Same way the SGST credit from UP to UP it will be a SGST only. But from UP to MP it will become IGST. And in case it is IGST credit you want to distribute, in any case it will be the IGST whether it is the same state or the other state. So my dear friend, what are the requirements, what are the precautions, how you will distribute, what you will distribute is something is there which is given in this calculation which I try to share with all my friends here. For that, what kind of a returns you have to file, how you have to file, that is all being explained in this particular slide which I shared with you. Now my dear friend, Sushilji, would you take this question or I should take the question? Okay. Now my dear friend, let me take some questions from my colleagues here. सुशील जी आप क्वेश्चंस
हाँ क्वेश्चंस स्मिता जी पढ़ रही हैं हेलो
Yes, sir. Should I read the questions?
हाँ स्मिता
मैडम रीड करने में तो बहुत टाइम लग जाएगा तो either I should but I will do that maybe first come first serve. So I will try to complete as many questions as I can in the next 15 minutes time which is available. Sushil ji, is the right way?
हाँ हाँ सर स्मिता जी पढ़ लेंगी जल्दी जल्दी वो चूज करके रखी है
अच्छा अच्छा ठीक है जी
हाँ स्मिता जी आप क्वेश्चन पढ़ लो
Okay, sir. The first question is procedure to take ITC for the RCM collected by service provider and paid by dealer.
Madam, in case this query is from Murli Siddha, that in case, for example, I am an advocate, I am rendering the services to this Murli ji. Murli ji has to raise a self invoice to him, and based on that, he can claim the credit. So first, he will pay to the government exchequer under the reverse charge, and then he can claim. So there is no requirement as such otherwise. And as an advocate, I will, because it will be exempted service for me, the credit will not be available. I read the question, madam, again. The seller upload invoice in B2C instead of B2B. Whether the input tax credit available to buyer? The answer is no, because that will not be reflected in ITC 2A. So unless and until they will not rectify. So legally speaking, the credit is available to you because as I given you the judgment. But procedurally speaking, the department will say, oh, I have not. So you have to go for a reconciliation. But technically, there will be a challenge. But legally speaking, you are eligible to claim. Whether the ITC will be available on the goods purchased for CSR, instrument for hospital ICU unit in rural area purchased and given to the hospital, tax invoice in the name of the company. My dear friends, since it will be in relation to your business only, and you are giving the machine to the hospital ICU unit, the credit will be available since it will be a allowed expenditure. But the only point which I worried, that as we have also undergone with the various examples and the case study, when you are giving, for example, I mentioned you that you are giving the oxygen concentrator to a COVID care center, then you have to reverse the credit because you have given a free of charge. So that particular provision can hit you, and then there will be a challenge because you have given that machine to the hospital for all the times. So you purchase that machine, you pay, given the machine to the hospital for all the times. Practically, you have transferred, disposed of the machine for a no charge, no consideration. In that case, you have to reverse the credit for that particular CSR instrument. The ITC on oxygen concentrator for an organization is eligible when they are specifically purchased and used for staff or employees. Since the oxygen concentrator, though because our employees are suffering and you are buying for them, but it's for personal use. It's not for the official use. The credit will not be available. How to claim the ITC on reverse charge? I have given you. Block credit by commission without passing an order. So I am not able to understand this question. Finally, discuss the recent amendment pertaining to ITC claim for GDA in real estate sector. We will have a separate discussion on the real estate sector, then we can discuss. Taxpayer is registered in Maharashtra. He undertake event in Delhi. Hotel stay accommodation and other related expenses are incurred there. The service provider issue invoice and levy CGST. The credit will not be available, my dear, unless and until the taxpayer is not registered in Delhi.
So if he is registered in Delhi, then only he will be able to claim the credit of the same. Registered person, a firm, own trucks and tempos and provide service of transport to goods by road to departmental store and mail malls query. Is it eligible for full ITC? In case you are under the 12% scheme, you are charging not a discounted rate of 5%, then you are eligible to claim the credit. Meaning thereby, if you are in the forward charge, you can claim the credit. If you are in the reverse charge, you will not be eligible to claim. Sanjeev Agarwal ji, dear sir, our company is a construction company, got contract for government for laying of pipeline from one big river to a famous farmer land for irrigation water. Last year in flood pipe, they already lost late damages. For that, we have claim, insurance claim. Please guide whether the ITC we got on purchase of pipe which are damaged, we have to reverse ITC. The answer is yes. Please describe debit note and credit note. My dear friend, in case there is a sales return or there is a purchase return, so that is something the debit note, credit note we are talking about. And at times there are the certain discounts for this also. The debit note or credit notes are issued. So we are talking about that. What is the definition of a personal consumption? As I mentioned you the two case for example, I'm using the telephone for I'm claiming the credit of the telephone bills, and I'm using the telephone also for my personal purpose to call my family. Is again a personal consumption. Similarly, the processing charges paid for the to the bank for the education loan of my son is again expenses for a personal consumption. AC machine purchased to a CA office can input GST can be claimed. The answer is yes if the depreciation is not claimed. Speaker may be requested to kindly talk in English for the benefit of participants from South India. Today I have discussed exactly in English only, except only 2 words in Hindi. In a trading concern, whether input tax credit will be available on purchase of water cooler, water dispenser, air conditioner, the answer is yes. ITC can be claimed on the hand sanitizer for office use, the answer is yes. To avail ITC, which statement is more relevant, either to go with the ITC as per GSTR 2A or as per so this is on everybody has to calculate that okay, what is the eligible credit, but ITR GSTR 2A you have to go with. Then we have should we take ITC on insurance premium paid by a company for its worker? The answer is no, the credit will not be available. ITC booked as expenses against bill because ITC not in GST portal. Tax audit report ITR filed. The credit which is not available on the portal will not be available, as I explained you in the notification. Has the meeting being rescheduled? Kindly intimate ho gaya. Input tax credit will be available on repair. It will be available on repair if it is not related to construction. And then they have given in a pharma company, it is usual practice to gift to a doctor for promotion of their product. So the gift which you are giving, you have to reverse the credit. The same is there. One dealer is engaged in gaming, bar and restaurant service. How to claim direct input and common input as restaurant service come under composite rate. As I explained you, rule 42 that you have to claim in that fashion. In the case of a brokerage paid for office space, if the service provider has charged IGST, the credit will be available to you. ITC not claimed in GSTR 3B, can it be claimed in GSTR 9? If you have that limit is available, you can very well claim. Session, then it talks about sessions. Then we have the credit, we move to the next one. CSR items I have covered. Supplier is registered in Gujarat and receiver is registered in Bihar. Place of supply is Gujarat and the supplier charge CGST and SGST. Can I claim credit? The answer is no. Unless you are not registered in Gujarat, you cannot claim the CGST which is being charged in the state of Gujarat. Then the ITC reversal for transition period real estate project. In case of an ongoing project, I believe that the real estate we will take up in the next session whenever it will be there. Otherwise, I will have the query, I will answer you separately. ITC, then the next question is ITC under reverse charge. Mechanical is not in the case of a non-executive director. So in case the ITC under reverse charge mechanical, so in case it is a whole-time director, then there will be employer-employee relationship, no GST is applicable, so no reverse charge is applicable. Excess RCM deposited and availed as ITC, how it will be corrected in GSTR 9. So we will talk about the procedural part, maybe another session. Then we are discussing in case of a club, which have liquor sale as well as taxable sale. Each month buys capital goods. How to calculate proportionate? So I have given you the formula in the 43 in the slide itself. The office will share with you the slide, maybe on upload on the somewhere, and you can take the benefit of that. Then we have the question. For a practicing CA with GST registration number, can ITC be claimed for GST paid on
Mediclaim, hospitalization insurance policy, answer is no. Section 62 has an overriding effect on all other subsections of Section 16, including Section 4. Unless one satisfies the condition of Section 62, he should not claim the ITC. What if a person receive invoice late and the time limit as specified in Section 64 elapsed? So answer is that you will not be eligible to claim that credit in that case. Seller upload invoice in B2C, I explained you. Rainwater harvesting system which unearth and water used for machine, trees and office use. Under income tax, it is treated as plant and machinery. Whether the credit will be available, if the answer is income tax, it is treated as plant and machinery. Certainly you can claim the credit and if it is for the purpose of office use. Then we have the ITC on goods consumed for CSR purpose. I have explained of the technical registered person a firm own trucks and tempos and provides this we have explained. So I believe that we have explained a lot of questions and even right now also I try to answer around 20-30 questions which I can answer in 10 minutes time, Sushilji. So I try to read as fast as I can.
Yes, sir. Yes, sir. You have done a wonderful session. I can say all detailed discussion. After that, you have taken the examples, which figures, that is practical test also done in the session, and you have answered good number of queries. Although people may feel that you are going very fast, but it was required to cover the maximum queries which are coming to us. So thank you very much for being here, and thanks all the participants for joining and in large number, and I hope next time onward we will definitely do the pre-testing of the technical things and it will not happen. We are really sorry, and our past president also apologized for this. So we are really sorry for this inconvenient caused to all the members. Next time it will not occur, that we can take care. Thank you very much, each one of you, and thank you office and technical supports provided team for handling this webinar, rather we should say live telecast. Hope we will continue to get your support in future also. Thank you.